Welcome back to Market on Close. I'm Nicole Petalides. We're just a few minutes away from the end of the trading day, the trading week, which has been a winning week, but we've come off the highs. Let's get the big picture here, and our Charles Schwab team is ready. Joe Mazzola, head trading derivatives strategist at Charles Schwab, and Kathy Jones, chief fixed income strategist, Schwab Center for Financial Research. Great to see you both. Kathy, I'll start with you. We're constantly watching the 10-year bond yield right now at around 4.63 or so. Next week we have the Fed. What do you anticipate?
Yeah, I think the Fed will do very little and try to say very little at the same time. So no one's expecting a change in rates at this stage of the game at this meeting. And it seems likely that the statement will be relatively unchanged, not really make a lot of news. And then there's a press conference, and that's where we'll get any insight into what the Fed is thinking these days. But at this stage of the game, I think Powell will try to tiptoe around some of the political questions and just focus on the messaging, which is, you know, steady as she goes. We're here for the time being until inflation comes down.
Right, and when you look at the tools, January and March don't seem likely to see a cut. It's more like June, maybe May. Joe, some of your thoughts as we saw some all-time highs, for example, on the S&P 500 even this morning. Some of your thoughts.
Yeah, I mean, we have a little bit of weakness going into the close. I think it's kind of led by pullback in technology. But I mean, look, Nicole, given the week, Nasdaq's still up about 3%, 2.5% in the S&P 500. So, you know, good start to the week. And I think a lot of it is contingent upon a couple things. I think, you know, at the beginning of the week, we heard about kind of President Trump, his ambitious kind of AI plan. I think that really kind of kick-started technology and on Tuesday with a bit of a rally there. You know, we've seen some continued easing inflation. I think that's helped in the last couple of weeks. And then last but not least, I mean, earnings have been pretty good. If you look at the S&P 500 earnings surprise, it's about 8% above what expectations were. So far, so good. You know, it's the early stages, and next week will be really a big week in terms of market movers when we get a lot of the mega caps releasing.
For sure. I mean, it was all systems go this week with the first week of President Trump's second leg as a president, and next week again, because we have a slew of tech names and the Fed and PCE. Kathy, as you take a look here and think about what could have happened this week, there were a lot of talks about tariffs that were as high as 20 or 25%, and those didn't really come to fruition.
Yeah, I mean, I think the bond market reacted favorably to the fact that there wasn't a big announcement day one, as had been promised, of widespread and broad-based large tariffs. What we have heard is some intention, although not clear if it's really just an intention or it's a plan, to raise tariffs on Canada and Mexico as of February 1st. But it all seems to be very much in flux. We've heard nothing about tariffs on China, which had been one of the big fears. So I think the bond market sort of sighed some relief here and said, okay, it's not as drastic as we thought it would be, at least at this stage of the game. But going back to 464, 465 really isn't making a lot of progress in either direction. I think it's just taking some of that fear out of the market. And then, as Joe mentioned, we got a lot of data coming up next week, a Fed meeting. So there's a lot of things for the market to kind of pull back and consolidate for and just wait and see what happens then.
Yeah. And look, we've gotten in a lot of economic data. I know you're watching services and manufacturing and consumer sentiment, Joe, all of these things tick by tick. But I'll go ahead and talk about the dollar pulling back and gold, which is at the highest level since October. But I mean, when you see 2,800, we're not that far. We're 27.78 a troy ounce. You know, what's going on there when it comes to the dollar and gold, and what does it tell you?
I think I think that there's a relationship between the two, right? I think as dollar has pulled back, it's given a little bit of a move upside in gold. And yeah, you're right. We're kind of pushing back towards those all-time highs. I think gold had been forgotten for a little bit in terms of kind of its store of value as money had rotated into Bitcoin. And, you know, whether or not you consider that a store of value, I think that's debatable, of course. But, you know, that to a certain extent, they are competing assets, right? So it's interesting to see kind of Bitcoin kind of rally back towards that 107, 108 level, pushing its all-time highs while you're seeing the same thing happen in gold. Kind of makes you wonder where, these flow of funds are coming from. It's something that we'll see next week if we continue to see equity markets push to all-time highs and Bitcoin kind of flirting with that area. And the same time you're seeing gold. I mean, it shows that a risk on trade is at hand right now.
All right, well, the Dow's down 142. I know we like to look at the S&P 500. That gives a nice broader look, but a lot of folks like to follow the Dow too. Down 17, 6101 on the S&P 500 after the record this morning of 6128. We say thank you to Joe Mazzola, head of trading derivatives strategist, Charles Schwab, and Kathy Jones, chief fixed income strategist, Schwab Center for Financial Research. And really